Hello, I'm Jaspreet on this side. I'm company secretary and I'm using Saransh by Institute of Chartered Accountants of India. I find it very appealing graphically, and we are revising the company's act. Disclaimer that this is only for revision purpose. And let's proceed. Last we covered dividend in our 11th video and start financial statement. We started with financial statements. In this video, we are covering reopening of accounts, section 130. Reopening of accounts. Application to be made by, for reopening of accounts, an application is to be made by either the central government, SEBI, any other person. Apart from this, income tax authority, statutory regulatory body. So now, for reopening of accounts, an application is made by central government, income tax authority, SEBI, statutory regulatory authority, any other person. An application is made to court or tribunal. So this application for reopening of accounts is made to the court or tribunal. Court or tribunal passes an order to the effect that earlier accounts prepared in fraudulent manner or the affairs of the company were mismanaged related to accounts. Okay, so either this order relates to either earlier accounts were prepared in fraudulent manner or the affairs of the company are being mismanaged related to accounts. Notice to be served to applicant, notice is served to the applicants, then take representation into consideration if any. If representations are taken, then that will be considered pass order to revise or recast the accounts, and order will be passed to revise or recast the accounts. Time limit for reopening. No order in respect of reopening of books of accounts relating to a period earlier than 8 financial years immediately preceding the current financial year shall be made. This means reopening of accounts is available for the immediately preceding 8 financial years. Immediately preceding 8 financial years from the current financial year, except on direction of the central government. BOAs may be kept for a period longer than 8 years and accordingly may be ordered of reopening of such period. So books of accounts BOAs, except on direction of central government, books of accounts may be kept for a period longer than 8 years and accordingly may be ordered for reopening of such period. So ideally it is 8 years. However, central government may specify by direction that books will be kept maintained for a period longer than 8 years. So for reopening of accounts, initiation should come from central government, income tax authority, SEBI, statutory regulatory authority, any other person. An application is made for reopening of accounts to court or tribunal. Court passes an order to the effect that earlier accounts were prepared in fraudulent manner or the affairs of the company were mismanaged relating to accounts, and notice is served on the applicants. Take representations into consideration if any and pass the final order to revise or recast the accounts, and accounts are to be maintained kept for ideally for 8 financial years immediately preceding current financial year for the purpose of reopening. However, central government may direct that these accounts may be kept for more than 8 years, and then that duration of more than 8 years can be reopened. Okay, this is relating to reopening of accounts. Section is 130. Voluntary revision of financial statements or board's report. Section 131 relates to voluntary revision. Means where the company wants to revise its accounts voluntarily. If it appears to the directors of the company, financial statement or board's report not in compliance with section 129 or 134, then on approval and order of tribunal, prepare revised financials. Company will prepare revised financial or revised board's report. Copy of order of revised financials and report to be filed with the registrar. So in INC 28, This order to revise the financials will be filed with the registrar of companies. So company can also do it if it is of the opinion, if the directors of the company are of the opinion that accounts or if financial statements or board's report are not in compliance with section 129 or 134. Then on approval and order of tribunal, it can be revised. Report can be revised, and copy of order of revising the financial statement or board's report is filed with the registrar of companies. Okay. Next we move to financial statements board's report section 134. Now authentication of financial statements section 134. Authentication means signing of financial statements. Financial statement signed by. Who can sign a financial statement? So first is chairperson. Chairperson authorized by the board. Either if the chairperson is authorized to sign the financial, then chairperson will sign. If board has not authorized the chairperson, here chairperson is also the chairperson of the company and not that particular meeting. In certain cases, the chairperson of the meeting is also considered as chairperson of the companies in certain cases. Alternatively, two directors will sign the financial statements, and if the company has a managing director, then one of the directors will be managing director. So first is if board authorizes chairperson to sign the financials, that is sufficient. Otherwise two directors will sign, and if company has a managing director, then one of those two directors, that is managing director, will sign along with other director. Apart from directors, chief executive officer, if he is appointed, then chief executive officer will sign. Chief financial officer, if appointed, then chief financial officer will sign. Company secretary, if appointed, company secretary will sign. So chief financial officer, chief executive officer, company secretary, these will sign. And from director side, either chairperson will sign if he is so authorized to sign the financials by board of directors. Alternatively, any two directors comprising one managing director if the company has a managing director, these will sign. Significant points. Signed copy of every financial statement shall be including consolidated financial statement if any. It shall be issued, circulated or published along with a copy of any notes annexed to or forming part of such financial statement, the auditor's report and the board's report. So significant point is that signed copy of every financial statement shall include consolidated financials. It shall be issued, circulated or published along with the copy of notes annexed to or forming part of the financial statement, auditor's report, board's report. So what we understand is that financial statement will include consolidated financial statement, notes to financial statements, auditor's report, board's report. These all will be covered in a financial statement. Contents of board report. Board of Directors report. Following information will be contained in the Board of Directors report. We have web address, if any, where annual return has been placed. So if a company is maintaining a website, then it will provide a web address where annual return is placed. Number two, number of board meetings of board. Here number is required to be mentioned. However, certain companies also mention the dates of board meetings. You have to anyway provide dates in the annual return. So you can either have a practice of mentioning number of meetings along with dates of the meeting, or you can mention only the number of meetings. Suppose there is a mistake in a date of board meeting, then you have to only revise uh, annual return. So suppose there is a mistake uh, in the date of a board meeting, then if you are mentioning date of meeting in the board's report, then you might have to revise AOC4 if you want to be 100% compliant. And amending annual report AOC4 is a tedious task. It requires approvals. However, for amending MGT7, at present, what we know is that a revised MGT7 can be filed along as it is without any concern. However, a revised AOC for the financial statement cannot be filed as it is as of date. You have to first go to ROC with consents of directors, reason why you want to revise, and then with approval, the form will be reopened to be revised. So board of directors web address will be there if the company is maintaining, where annual return is uploaded, number of board meetings, directors responsibility statement. These contain 4 or 5 lines that accounts give true and fair view. Then directors have ensured that legal compliances are in place and there are similar other assumptions are correct. So director's responsibility statement is there. Details of fraud reported by auditors. If auditors have reported any fraud, then those details will be provided. Declaration by independent director about their independence. Company's policy on directors' appointment and remuneration. Company having policies relating to directors' appointment and remuneration that will be provided. Comments by board on remarks made by statutory auditor or and CS. So if auditors have made any remarks, so it may be statutory auditor, secretarial auditor, cost accountant, cost auditor. So then board will have to comment on the remarks made by the auditors. Particulars of loans, guarantees and investments. These details will be provided in the board's report. Then particulars of contracts or arrangements with related parties. If there are contracts or arrangements with related parties, then those will also be disclosed in board's report. State of company's affairs, general state of company's affairs, how good or bad company is doing, that will form part of board's report. Amount carrying reserve or paid by way of dividend, any amount which is transferred to reserves, especially special reserves, then that is important. General reserve, disclosure about general reserve is not important. Any special reserves amounts are transferred to special reserve that be disclosed, and paid up by way of dividend. Any amount is paid by way of dividend, then that be disclosed in director's report, board's report. Material changes affecting financial position. So if from the date of end of financial, that is 31st March, after that till this board's report is finalized, if there are any material change which are affecting the financial position of the company, then that we also discussed. If there are initiatives relating to conservation of energy, technology absorption, or foreign exchange inflow outflow on actual basis, then that will be disclosed in board's report. So anything done to conserve energy like LED lights installed or any other initiative, and technology absorption that will benefit, then that we covered. And foreign exchange, now here foreign exchange on actual basis is to be disclosed. So for actual basis we have to consult the accounts team. By default, what is mentioned in balance sheet, financial statement relates on accrual basis. It may not be on actual basis. So it may match with financials, it may not match. So for foreign exchange, one should consult accounts team before entering in the board's report. Development and implementation of risk management policy, a paragraph line on how the company is maintaining its risk management policy, that we covered in board's report. CSR policy and initiatives, that will be covered in board's report. Other prescribed matters, any other matters which are prescribed, that will be covered in board's report, like regarding POSH compliances, Prevention of Sexual Harassment Act. So that will be provided, whether internal committee is maintained or not, whether there were any complaints during the year, that we incorporated in board's report. So listed or other public companies, paid up share capital 25 crore or more, shall contain statement indicating the manner in which formal annual evaluation of the performance of the board, its committees, and of individual directors has been done. So, a formal evaluation of, and that is annual, a formal annual evaluation of performance of directors is done. A formal evaluation of performance of board of directors as a complete is done. A formal annual evaluation of various committees independently is done on annual basis, and that we also disclose. Now this is applicable for listed companies. So in listed company, formal evaluation is to be done. Then in case of other public companies where paid up capital is 25 crores or more. So evaluation of board, directors, committees is to be done on at least on annual basis by the listed companies or any other public companies, not private companies, only public companies with paid up share capital of 25 crores or more. If the paid up capital touches 25 crores, it is a public company. Then annual evaluation of performance of board, directors, committees is to be done. If it is a listed company, then annual evaluation of performance of board, directors, committees is to be done. Okay. So next we move to regarding this significant point. Board's report shall be prepared based on the standalone financial statements of the company and shall report on the highlights of performance of subsidiaries, associates, and joint venture companies and their contribution to the overall performance of the company during the period under review. The board's report and any annexures under this section shall be signed by its chairperson if he is authorized by the board. Where chairperson is not so authorized, it shall be signed by at least two directors, one of whom shall be a managing director, or by the director where there is one director. Okay. So if the company has only one director, then that one director will sign the financial statements. The key point was this first point, that it will be prepared, board's report shall be prepared on the stand-alone financials. So in case company has consolidated financial statement, then board's report is not required for consolidated financials. However, board's report may contain financial information about standalone on of the company and also of the consolidated financials. It may have a pointer on that, but a separate board's report for consolidated financial statement is not required to be maintained. And it shall report on the performance of subsidiaries of the company. So if company has subsidiary, then performance of subsidiaries will also be covered. If the company has associates, then performance of associates, that will be covered. If the company has any JV companies, joint venture companies, then performance of joint venture companies will also be covered. That is contribution, their contribution of subsidiaries, contribution of associates, contribution of joint venture companies to the overall performance of the company during the period under review. Director's responsibility statement. What are the contents of the director's responsibility statement? A director's responsibility statement shall contain number one, applicable accounting standards that have been followed in the preparation of the annual account. So applicable accounting standards that have been followed in the preparation of account, Indian accounting standards or what. So that will be disclosed, that we company has followed the applicable accounting standards. This will be disclosed in the director's responsibility statement. Second point which will be covered is directors' selection of such accounting policies and applying them consistently to give true and fair view of the state of affairs to the company and of the profit and loss of the company. So how the directors have selected and applied the accounting policies, then their consistency give a true and fair view of the state of affairs of the company. True and fair view of the state of affairs of the company. True and fair view of the state of affairs of the company. This is second point. Then number three is directors had taken care for the maintenance of adequate accounting records or safeguarding the assets of the company and for preventing and detecting frauds and other irregularities. So directors have taken care that there are no frauds. Directors have taken care that adequate accounting records are maintained. Directors have taken care that safeguarding of the assets is in place and frauds are prevented and detected, assets are safeguarded. adequate accounting records are maintained. So this will be provided in director's responsibility statement. Next will be directors had prepared annual accounts on a going concern basis. So company is maintained, accounts are maintained on a going concern basis. Then fifth is the directors in case of a listed company. This is applicable only for a listed company. The directors in the case of a listed company had laid down internal financial controls to be followed by the company effectively. So the internal financial controls are being followed effectively. This is applicable only for listed companies. At times we put this point in all directors report, in all boards report. So ideally it should be avoided unless you are sure that this is being done. Then in additional disclosure is perfectly fine. However, do not make your directors liable for anything extra, anything which you have not verified. So this is applicable only for listed companies that the company has laid down internal financial controls and these are being followed effectively. Then sixth is the directors had devised proper system to ensure compliance with provisions of applicable laws operating effectively. So there is a proper system in place that ensures all the compliances and the applicable laws are perfectly operating. So these were the financial statements. Next is Corporate Social Responsibility CSR section 135. Corporate Social Responsibility. Meaning and activities which are specifically excluded. So CSR means the activities undertaken by the company in pursuance of the statutory obligation laid down in section 135 of the Act in accordance with the provisions contained in CSR Policy Rules 2014. So CSR specifically covers only those activities which are statutorily made applicable, obligatory for the companies and are specified in CSR Policy Rules 2014. Okay. CSR shall not include the following. What is not included? Activities undertaken in pursuance of normal course of business of the company, provided that any company engaged in research and development activity of new vaccine, drugs, medical devices in their normal course of business relating to COVID-19 for the financial years 2020, 21, 21, 22, 22, 23. So only for financial year 2021, 21, 22, 22, 23. Then if the company is engaged in R&D for new vaccines, drugs, medical devices, then it will be covered subject to following conditions. Conditions are such research and development activities shall be carried out in collaboration with the institute or organizations mentioned in Schedule 9th of Schedule 7th to the Act. So only that is done in collaboration with provided institutes and organizations. And another condition is details of such activities shall be disclosed separately in the annual report on CSR. Such details are separately disclosed in the annual report relating to topic CSR, and then these are done in collaboration with the institute or organizations mentioned in item 9th of schedule 7th of the Act, and these relate to COVID-19 for R&D relating to new vaccine, drug or medical devices, and these are restricted to 3 financial years: 20, 21, 22, 23, 2021 one financial year, 21, 22 another financial year, 22, 23 another financial year. In future this point can be ignored as it will become redundant. Then what are covered next? Shall not cover, shall not include. Next is, first was activities in normal course of business not included. Any activity undertaken by the company outside India except for training of Indian sports personnel. So if trainings are done outside India except for training of Indian sports personnel, then that will be not covered. So it is required that such activities be undertaken within India. Contribution of any amount directly or indirectly to any political party. If any contribution is made directly or indirectly to any political party, then that will not be covered. Activities benefiting employees of the company, the Code on Wages 2019. So activities are done. These are type appears to be social activity, but these are restricted as being done for the employees of the company. Then that will not be covered in the social corporate responsibility (CSR). Activities supported by companies on sponsorship basis. If the company is supporting an activity with intent that it will serve as a sponsor, it will be clearly highlighted that company is a sponsor of this particular program, then those will not be covered. Activities carried out for fulfillment of any other statutory obligation under any law in India. So, if any other law requires that such activities be done, then we cannot include in the CSR. A separate activity for CSR as provided in this act will be undertaken, and if it is satisfying any other obligation under any other law, then that will not be covered. So, what are not covered? Activities in the ordinary course of business are not covered. Activities outside India are not covered. It will be covered only if it relates to training of Indian sports personnel. Then what is not covered? Political contributions directly and indirectly not covered. Benefiting employees, activities benefiting employees not covered. Any activities done on sponsorship basis not covered. And any activity for fulfillment of any other statutory obligation not covered. Companies required to constitute CSR committee. Which companies are required to constitute CSR committee? Every company shall constitute a CSR, corporate social responsibility committee of the board having net worth 500 crores or more. So committee is mandatory. If the committee is not mandatory, then ensure board of directors is executing the functions of a CSR committee itself. And a separate committee is required where net worth is more than 500 crores or more, turnover is 1000 crores or more, net profit is 5 crores or more, or during the immediately preceding financial year. So we will check these conditions during the previous 3 financial years. Net profit 5 crores or more, turnover 1000 crores or more, net worth 500 crores or more, comprising of. Then committee will comprise of, if the CSR committee is formed, then committee will comprise of 3 or more directors, out of which at least one director shall be an independent director, provided that where the company is not required to appoint an independent director under section 149(4) of the act, it shall have its corporate social responsibility committee of 2 or more directors. So ideally, committee will have 3 or more directors, with one director being independent director. If company is not required to appoint an independent director, then CSR committee will have 2 or more directors. So this is the legal requirement as to composition of CSR committee. And next we move to amount of contributions towards CSR. How much amount is to be contributed towards CSR by the company? The board shall ensure that the company spends in every financial year. So in every financial year, you have to spend at least 2% of the average net profit of the company during the 3 immediately preceding financial years. So immediately preceding 3 financial years. What was the average net profit? Calculate that average net profit, and at least 2% of that average net profit is contributed spent on CSR activities. Where the company has not completed the period of 3 financial years since its incorporation, at least 2% during such immediately preceding financial year in pursuance of its corporate social responsibility. Then if the company has not completed 3 financial years, then at least 2% during such immediately preceding financial year in pursuance of its corporate social responsibility. So immediately preceding financial year, what was the profit? At least 2% of that net profit is to be spent if the company has not completed 3 financial years since its incorporation. In its report shall specify the reasons for not spending the amount. If the amount is not spent, then reason will be specified, and where the unspent amount relates to ongoing project, transfer such unspent amount to a fund specified in Schedule 7. So Schedule 7 will provide the fund. If there is unspent amount, then reason for why the amount is not spent, and transfer that unspent amount to a fund as specified in Schedule 7. So that can be done. So unspent amount is to be deposited in the central government fund or COVID-19 fund that was created, or it should relate to an ongoing process that is also allowed, ongoing project, where the company spends an amount in excess of requirement. If the company has spent in excess of requirement, then can the excess be carried forward? So such company may set off such excess amount against the requirement to spend for such number of succeeding financial years and in such manner as may be prescribed. So carry forward is allowed, but how many years carry forward is allowed? That will be provided, that will be prescribed in the rules. Transfer of unspent CSR amount to special account. Now, CSR amount, any amount remaining unspent pursuant to any ongoing project undertaken by a company in the pursuant of its CSR policy. So, amount is unspent pursuant to any ongoing project. This is the case where there is an ongoing project, then shall be transferred within a period of 30 days from the end of financial year. Then amount shall be transferred within a period of 30 days of the end of financial year to a special account to be opened by the company in that behalf for that financial year. Special account will be opened and amount will be kept there. This special account is to be opened with a scheduled bank to be called the unspent corporate social responsibility account. So this special account will be opened with a scheduled bank and its name would be unspent corporate social responsibility account. Now, such amount shall be spent by the company in pursuance of its obligation towards the CSR policy. So such amount shall be spent in accordance with its obligation as specified in the CSR policy of the company within 3 financial years from the dates of such transfer. So we have got the timeline that carry forward is available for unspent amount carry forward put in a special account, unspent CSR account for is available for next 3 financial years. Failing which, if the company is unable to do so, the company shall transfer the same to a fund as specified by Schedule 7. That fund is Central Government Fund for COVID Relief Fund, which was COVID Relief Fund. Within a period of 30 days from the date of completion of the 3rd financial year. So, company has unspent amount. That unspent amount relates to ongoing project. Within 30 days of end of financial year, the amount is transferred to a special account. That special account is opened with scheduled bank and it is titled unspent corporate social responsibility account. Then that amount shall be utilized only for the obligations under the CSR policy within next 3 financial years from the date of such transfer, and if this is not done within next 3 financial years from the date of transfer, then within next 30 days that amount will be transferred to a fund as specified in Schedule 7. That fund related to COVID-19 relief fund made by central government. Okay, so now next topic which we will start in our next meeting is entitlement of members to receive financial statement. Disclaimer again that this is only for revision purpose. Take care. Thank you.